Hello traders, welcome to this video. In this video I'm gonna share with you a free trading strategy, and as I said, this is gonna be completely for free. Now, I'm not the usual guy that comes here on YouTube to share some experience and to share some knowledge and then tries to sell you a course. I'm here to share with you completely for free a trading strategy that statistically works, that you can actually use to improve your skills and finally make profits from the market. I've been a trader for 9 years and I know exactly what is needed in order to become profitable, and now it's finally time to talk about it. This strategy is going to be useful for you whether you are a beginner, intermediate trader or advanced trader. The reason why I say this is because if you are a beginner, you can start your trading journey with a good strategy and stop looking around and stop going from strategy to strategy until you find a good one. This can be your final stop, so make sure that you watch the whole video. If you are an intermediate or advanced trader, I believe that this strategy can be useful to take some concepts and use them in your strategy to improve your accuracy, improve your skills, and just improve your results with your trading. Now, this is part 2 of the full trading strategy that I'm sharing with you for free here on YouTube. So make sure that if you haven't watched it already, you go and watch part 1. It's extremely important that you watch part 1 because right now we're going to talk about some other concepts that are going to be put together with all of the concepts that we talked about in the last video in order to put all of them together in the end and actually have a profitable strategy that statistically works. You know, last time in our first video together, I shared about the best times to trade, order blocks, liquidity, the best trading days of the week, and many other concepts that can be extremely useful for you in order to become a profitable trader. But right now it's time to actually proceed and talk about some other concepts. So we're gonna start off talking about lunch break order blocks. You better get ready, take pen and paper and get ready to take notes. Let's go. What's up everyone, welcome in this new video. In this video we will talk about the lunch break order block. So let me write it down for all of you. Lunch break OV. So what does this mean? This order block is called lunch break because it is usually created in between the London kill zone that we usually look at and the New York kill zone that we usually look at. So in this small window, we usually create the lunch break order block. This is all stuff that I noticed during, hours of... My friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free because here in the description below you will find a link to actually get access for free as usual. Backtesting and trying to apply this type of concepts, so now I'm here explaining it to you. As I said many times in the other videos about the kill zones and about the Asian range, this is just extra understanding of the market that will help you refine your strategy, be more accurate, but it is not useful and you cannot use it by itself. You need to use it with all the understanding of the market that is needed. This is just to refine and to understand better the market. So what is the lunch break order block? It is an order block, supply or demand level that is usually created during this small little window between the London and the New York kill zone. Okay, now why do we need it? What do we need it for? How to use it? What to look for? We don't really need it. This is just to refine your order block selection. This is just to avoid some stupid losses and actually just refine your zones and avoid some other zones. Now, why should we keep attention to this? Because as you see, there are many zones in the area, there are many possible order blocks, and let's just get started and then let's start talking about what is the lunch break order block. As I said already, it is an order block created during this small little window, and what do we need to use it for? We need to just avoid it. We don't want to trade from this order block because it is just an order block usually created in this window when there is less activity also from the banks and the financial institutions, and this order block tends to be manipulated to go to a higher or lower order block and then continue. So this order block is usually manipulated. Let's look at some examples here. Order block, okay? This order block is created during this window. We of course don't hold it, just go to the higher order block that was created during London and continue to the downside. Here, as you can see, this order block, which is this candle right here, the candle was created during this window. Here we don't hold it. Same thing for the other one. So let me delete this one and let me put this order block right here. This order block didn't hold. If we fail it by 1 pip, it means that it didn't hold, and of course it didn't hold also after. What order block actually was respected? It is this overall order block right here that was created during London. Okay, let's go back. More examples. Here we don't have nothing. Doesn't always apply. Here nothing, as you can see. Here just went to the downside. Here there is no order block created. Well, actually, because I was looking at the downtrend, if we want to continue with the downtrend, of course, we wouldn't look for buys, but if we just want to look at how to apply the lunch break order block here, this lunch break order block, which the candle was created during this little window, is manipulated, and we go to the lower area to then continue to the upside. Here, this is the order block, the candle right here of the order block was created during the lunch break. And what do? We go to the upside, we go to the higher order block right here, and we respect this order block, which was created during London, okay? Let's see here, nothing. Here, lunch break order block was created here during lunch break. Wasn't, we don't respect it. We go to the upside, mitigate the higher order block, and then continue. And start, and I'm just showing, it's not like one example out of 10. As you can see, there is, this is statistics, and this happens, this holds, okay? Here, nothing. Here, lunch break order block, we're going to the upside. Here, we create this order block by creating this move to the upside. Here we have the order block. This order block is manipulated. We actually tap into the lower one and then continue. Okay, lunch break order block right here. Let's see if I marked out other examples. Yes, perfect. Lunch break order block right here. And this, I wanted to talk about this example. Why? Because this example is actually good. This example we just held and continued. Now, why? Because this isn't a rule that applies 100% of the times. In trading, there is no 100%, as you can notice, but there is a way to increase your accuracy a lot. Every time refining your strategy, applying certain concepts, increasing your accuracy. So in this case, I would have looked for this supply. So I would have liked to see a manipulation of the lunch break order block, which was created right after London close to this level to then continue. This didn't happen, and it would have been a missed trade for me. This doesn't mean that it doesn't work. This doesn't mean that next time you will not apply this concept, because many traders, and let me talk a minute about this, many traders see something happening one time and then they change their whole strategy. You need to apply statistics. And I showed you many examples in this chart, and you can see what is happening. You can see what is happening. You can see that this is statistics. You can see that this usually happens. Doesn't mean just because one time we hold it that next time you will actually trade it, because guess what is going to happen next time? That you will enter here, we will hit your stop loss because we will mitigate this supply, and then we will continue. So then you will be confused, you will not know what to do. So don't just jump around stuff just because you see it happening once or twice. Once or twice, you can also see trend lines being respected. Doesn't mean that trend lines are good to trade. Okay, just because, and maybe we actually go for buy with the trend line. So what will you do next time? Actually trade the trend line just because it worked one time? Or will you use it according to your trading plan and according to statistics that says that usually trend lines are manipulated to go to the upside? What will you do? Okay, please keep that in mind. So this is the lunch break order block. Here we see some other examples. Here, lunch break order block manipulated. Here, another lunch break order block. I know you cannot really see it, but this week on 5 minutes is basically an order block. And we continue to the upside. Okay. I don't think I have other, yeah, another example actually. Here, lunch break order block manipulated to the upside. Okay. And I think this is all for, no, actually I marked many examples, but as you can see, it's almost every single day, almost every single day. Lunch break order block right here, manipulated. We go to the higher order block and then we continue. And that's it. Okay, I'm just showing you on GBP/USD. There are many examples on all charts. Just show you Euro USD for, just to compare another chart. Let's see. So let's start from here. Here we go to the downside. Guess what do we create during, well, here we are, it's not really, let's just look at the lunch break order block. This is lunch break order block, mitigated, but then we eventually go to the upside to then continue to the downside. Here there is not really anything. Here, lunch break order block in this downtrend. We have lunch break order block created during lunch break right here. We don't hold it, we go to the upside to then continue. Here, in this case, we do hold it. Well, actually, no, we do manipulate it. Great. Lunch break order block. What happens? We manipulate it by a little bit, but we still do manipulate it, okay? And we go to a lower level that was created during London. During London, we had this area, okay? Which is the same in this case, but just to show you that if you just take this order block, you can hit your stop loss. Here, okay, perfect, also here. You see this breakout structure, you see this level failing, you may take this order block, but guess when it was created? During lunch break order block, manipulated, we go to the downside. Well, of course, if you pair these together with the understanding of, you know, of premium and discount, then you would already avoid this. But sometimes I'm just showing you the lunch break order block because sometimes the lunch break order block may be down here, maybe in a discount, and it still cannot get respected because we go lower to the London or to another stronger order block to then continue, okay? Here, okay, perfect. This is the order block during London, so that's the good one. We have lower lunch break, well, not really, but almost lunch break order block, which of course is not respected. Here, not really anything, just messy per section. Here, we might have some, it's not really a good example when we are ranging, when we're going to sideways, but here we have the lunch break order block and we just go to the upside and then we just continue ranging, so nothing. Perfect. Here, London order block. This is lunch break right here, lunch breaks, order blocks, which are manipulated to then continue to the downside. And I think I showed you some examples already. Here we respect the London order block, we push to the downside. This is the lunch break order block, but we never come back to it. We never touch it again. Here, perfect. Lunch break order block. Okay, do we respect it? No, we go to the upside. In this case, we actually manipulate the previous high, but you get the point. Let's see, here we actually do respect the lunch break order block. We have a breakout to the upside and we do respect it. Here we do respect it again. lunch break order block. We come back. This is not a setup that I will really trade, as this move is not strong. This is not a strong break structure. Just pull back and continue. This is not really a setup that I will trade. Here, do we have some? Yeah, perfect. Here, lunch break order block, of course, not respected, which is a similar setup to this. You see break of structure with little momentum, we pull back and we just go to the upside and tap into higher areas. This area, which is actually a 5 minutes area before the big move to the downside. Let's see here, nothing, just ranging, to be honest. Here, do we have a lunch? No, this is still London. This is a lunch break, but of course I can mark some order blocks, but they're not respected, of course. Here, what do we see? Here is London, here is lunch break. So you could argue that this is the lunch break order block, but then what happens during New York, we actually create this one, which is slightly manipulated to the downside by 1 pip. Anyway, we could count this as an example of a lunch break order block that actually holds, okay? Now, if you pair this and you use it together with your understanding of the market, with sessions, with market structure, supply and demand areas, and so on, but most importantly, with lower timeframes confirmation for entries, you will eventually increase your accuracy a lot. Because if you see that this lunch break order block also corresponds to this New York order block that was created, and all of these created a break of structure to the upside, and we are retracing, and maybe you go on the 1 minute time frame to check what's happening right here, and over there you see our confirmation that you will understand in the confirmation video, something like this. It could be, or other types of confirmation, maybe on the 1 minute inside of these candles, which in the 15 minutes you cannot actually see. Then you can just take the trade from here because you had enough confirmations. So you need to have an understanding of the market aside from the lunch break order block, but I'm just showing you a way, something that you should keep in mind to increase your accuracy and avoid some stupid losses. Okay, thank you, and I'll see you on the next video. I hope that you paid attention to the lunch break order block video. It's a really useful video and very important with our strategy, because you will understand by watching this whole video, you will understand that this concept can be put together with other concepts that we're going to talk about next. And by understanding during which times we want to pay attention to the market and during which times the market is not giving us opportunities, then we can actually increase our accuracy and increase our results. So right now we're going to deep dive into the Asian range concepts, which are some concepts that I use every single day in my trading strategy. We're going to start from the basics, and we're going to go to the most advanced stuff about the Asian range. So let's start. What's up everyone? In this video, we'll talk about the Asian range. So first of all, keep in mind that the Asian range will not help you if you don't have your overall analysis with other things. So you need your market structure with direction of the market, supply and demand, your liquidity areas, so liquidity, and so on and so on. So the Asian range is not useful if you don't do these things. These are way more important, okay? Now, after you've done this, the Asian range can help you increase your accuracy, increase the accuracy of your entries, refine your entries, understand better the market, and so on. So what is the Asian range? The Asian range happens during night. Well, it is night for me that I'm either in Italy or in Spain, Gran Canaria, but for other people could be during other times of the day. But I was just saying Asian range is basically during Asian session. And during Asian session, many pairs usually just range. It can be just a lateral range. It can be a range with a little bit of trend, but not really trending, okay? So something like this, but overall it's a range, okay? It's not like the market is really trending or making the moves. Now, this applies to, especially, it applies to all pairs, but especially it applies to major pairs. So Euro USD, let me write it down for everyone. Euro USD, AUD USD, GBP USD, then I will use it on, you can use it on GBP AUD and GBP JPY too, but they are secondary. I don't really recommend it that much. You can use it on USD CHF. You can use it on NZD USD. Okay, you can use it on all pairs. I'm just giving the best ones that, in my opinion, are these. These are the ones that I tested the most. And then we have the secondary ones, which could be GBP AUD. I would avoid GBP JPY, GBP CAD definitely. Let's see, USD CAD. Okay, these are good too. Now, this doesn't mean that it doesn't apply to other pairs, but I prefer these. Why? Because other pairs have, for example, the JPY. My friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free, because here in the description below, you will find a link to actually get access for free. I'll see you soon. And the JPY can actually trend during the night, okay? Not every time, but it can do that. So it doesn't really apply. So I recommend to apply it more to this. Now, how does it work? During Asian session, we create the Asian range. To find it, you can just use an indicator. As you know, I don't use indicators. This is not like to help us trade. It's just to let us see where the Asian range is. If I go on the chart, I'll show you. It just shows you where the Asian range is. So basically, let me delete these things. Okay, this is the indicator, just shows you that this was the Asian range. And basically you can just put a box from the highest point to the lowest point and mark it out. And then you can just take off the Asian range. It just helps you instead of opening your chart and looking at the time where the Asian range started and where it finished and marking yourself the highest and lowest point, you can just use an indicator that tells you the range, basically. So you can find it with that indicator, and it marks out your Asian range. I usually recommend to draw a box around your Asian range. And in this case, from the lowest point to the highest. Okay. And then you have your Asian range. Now, why do you need it? First of all, we need to know the same way that equal highs and that, I don't know, trend lines and so on are manipulated. So the same way that these things have liquidity here and here, if you are in an uptrend, okay, also the Asian range has liquidity, both above it and below it, okay? So keep in mind the Asian range builds liquidity. It is a range, therefore, as you know, ranges have liquidity, okay? So far, this doesn't really help you, as this is not to, this needs to be put together with a chart, direction of the market, so whether we are bearish or bullish, order block, and also other liquidity levels, liquidity points. So whether we have trend lines, whether we have some double tops, double bottoms, but overall, this is the Asian range. Now, what are the possibilities after the Asian range? After the Asian range, London session starts. And after London session, as you know, we have New York session. What are the possibilities during these sessions? The possibilities are that we manipulate the Asian range. So for example, if the direction of the market is to the downside, we manipulate to the upside and then we continue to the downside, or that we actually, maybe the direction is to the downside and we just break to the downside, retest the Asian range to continue. Okay, and of course this is kind of obvious that these are the two possibilities. Also, this is during London session. We also have possibilities that during London we manipulate and drop, and that during New York we retest and continue, which is different than what I showed earlier, which was just drop, retest and continue. In this case, manipulate, drop, retest during New York and continue. Okay, now another option is manipulate, London rally after manipulation, New York reversal. So let me write all of these down for you. I know that if you don't use these together with an understanding of market structure, supply and demand and liquidity, these don't really help you, but it's good to know these things in order to have an understanding of the market. So here with the Asian range, so you have a possibility of manipulation plus rally to the opposite direction. Then you have how to call it? We have a let's call it that the market takes a direction, retests the Asian range and then continues. This is option 1, option 2. Then we have that. Then we have to also include New York session. We have the option that we have London manipulation and rally to the opposite direction plus New York retest and continuation, or basically the same thing to London manipulation and rally to the opposite direction plus New York, plus New York reversal actually. Okay, so okay, so we have possibly London manipulation, and after the manipulation we manipulate to take a direction, and then New York reversal, which is the last one that we talked about. We have London manipulation and rally to the opposite direction plus New York retest, so which was this one, London manipulation plus taking a direction, New York retest for a continuation. Then we have market takes a direction and retest during the A and retest the Asian range and then continues. So instead of manipulating and then taking a direction, it just takes a direction, retraces to retest the Asian range and continues. Or just basic, which was the first one, manipulation and rally to the opposite side. So manipulation and rally to the opposite side. Of course, there can be other variables where you have London taking a direction and retesting and continuing, and then New York actually reversing and finally continuing to the upside. But this all depends on higher time frames direction, supply and demand areas, and liquidity areas. Keep in mind, this is just for an extra understanding of the market. Okay, so let's delete all of these things. All right, Now, most importantly, we will need to use this together, as I said already many times, together with higher timeframes, and I will need to show you confirmations and examples with the chart. Now, for example, since I have one here, which is a trade that we are in right now, actually in the VIP channel, this is the Asian range. This is when I put AR. Let's delete the indicator, and you will need these fib levels as projections. You can copy this, take a screenshot, take a photo, do whatever you want, and actually save them. You can go to template, save as, and you save them as Asian range projections. And this will actually help you project the Asian range. So see the projections of the Asian range in order to see possible targets and possible entry areas. I will not explain this in this video. This will be in the next video. But as you can see, we have the push to the upside. So let's do the overall analysis so you can get an idea. So EURUSD is bearish. Do we agree? Yes, market structure is bearish. Then we have our 15 minutes supply right here, right? Which is at a premium area. You see the 0.5 here, premium area. Then we have the Asian range, which we found with our indicator of the Asian range, or we can just look at the time and mark the Asian range by ourselves. And then we have the projections of the Asian range right here. We have the 1.5 projection, which is here, which is where the market reaches. It doesn't perfectly stop at the 1.5. It actually reaches the order block, and this is why it's important to have an over understanding of the market and not rely only on the Asian range, and then it drops, okay, after confirmation. Okay, I'll see you in the next video for a more in-depth explanation on how to use the Asian range. After this small introduction about the Asian range, it's time to actually understand how it works and how we're gonna put it together with our strategy. So let's talk about the Asian range and the best times of the day and put these two concepts together, and then proceed to another concept, which is the Asian range projections. Now, the Asian range projections, you're not gonna see them on my charts every single day, but it's a good concept to just keep in mind. There are some concepts that it's good to be able to remember during certain occasions, and I believe that all of these concepts that I'm sharing with you are going to be extremely useful for your strategy. What's up, everyone? In the previous video, we just saw how to use the kill zones and how we see the London manipulation and possibly New York pullback or New York reversal. Now, in this video, I just wanted to show you how it is basically used together with the Asian range, which is pretty obvious as London is right after the Asian session. But I wanted to show you, since your eyes can actually just start to get trained and used to seeing these things, and you can get used to using the Asian range together. Now, later we will see how to use the Asian range projections for your trades, and later in the course you will see how to use all together. But for now, I just wanted to show you. So Asian range, and as we mentioned earlier, London manipulation, New York retest for continuation. Same thing here, Asian range manipulated and taken the liquidity of the Asian range with the London manipulation. Same thing here, Asian range, London manipulation to the upside. We come back again during New York. Actually, here we come back the first time, drop, come back second time, continue. Here, perfect, even better. We manipulate by 1 pip, so we just go above it, grab liquidity of the Asian range, continue, okay? In this example, instead, nothing happens, and this is why it's not 100%. Asian range and then just drop, okay? New York pullback for continuation. Asian range, London manipulation of the range to the downside, as you can see, continuation, New York pullback, continuation. Asian range, well, in this case, it just went crazy, so this is not really, we cannot apply this. Maybe there were news or something. Here, Asian range, London breakout, retest, and continuation. Now, why did this happen? And this is different from what we saw usually, which is usually London manipulation for a reversal, which we usually continue. Now, why is this different? Because if you refer to the first video where I talk about the Asian range, this is one possibility. It's not always manipulation to continue. Sometimes it's just breakout, retest of the range to continue. Okay, it's not always that we manipulate in one direction to reverse. Okay, this is the second possibility, and of course this needs to be paired and used together with the direction of the market and with the trend. And if you do this, you can clearly see that we are in a downtrend. In this case, in London, we have this movement, and instead of thinking that this right here could be the manipulation to then reverse to the upside, you actually understand that this is the breakout. We fail the previous low, we fail the previous demand for a retracement to supply to then continue to the downside. Now, why and how do you understand this? For the direction of the market. Direction of the market is together with market structure. So let's say we have Asian range, London starts. Instead of seeing a manipulation to the upside, which could have been great, maybe to this supply to then continue, we don't see that, and we just see a rally to the downside. We will not interpret this as a manipulation, but we will interpret this as just a move to the downside, breaking structure, breaking the previous demand levels for a retracement, and we're looking to enter at supply. Very important, okay? Big difference. Here, same thing. Asian range, London, we feel the previous level. Is this a manipulation or a break of structure? It's a break for a retest and for a continuation. Now, why? Where's the direction? Lower lows, lower highs, lower lows, lower highs. We are in a downtrend, okay? Here, ranging, just going sideways. You saw this example earlier. It's not really the best where you want to be involved. Here, same thing. Asian range, London, we don't manipulate to the upside, which could have been a very good possibility, which I would have liked to see because that would have been perfect, tapping into supply. This is what we usually want to look for, continuing. But we don't manipulate and we just go down. Break structure. So what do we look for? And this is the overall 1 hour supply right here. Here we build the liquidity. Of course, this could be one entry and then we just keep it open, or later, if you don't get involved right away, we build the liquidity, manipulate above it, and continue to the downside. Here, Asian range, London, we just go to the downside. Is this a manipulation or just a takeoff direction? Here, we're breaking everything to the downside. Therefore, we look for supply. Is this at premium? Yes, it is a premium. Perfect. Okay. Here, Asian range. During London, we manipulate a little bit to the upside, and then we drop. New York, we retest. We actually take. This doesn't usually happen many times, but of course it could. We take the liquidity of London and then we drop. And this could be honestly a possible stop loss, since I will trade the New York pullback, and I would expect this high to be protected. I wouldn't expect it to be run. Okay, but in this case, this happened. Previous one. Okay, we are in an uptrend. All right. Asian range, London manipulation, push to the upside, break of structure, we get involved along the way. Okay, so you're starting to understand and get your eyes trained. As I said already, please put these two indicators on your chart. These are not real indicators to actually trade. These just help you see during which time there was the Asian range, during which time we are in London session or in New York session. And keep in mind that you will not use these concepts on JPY pairs, at least for my preference. If you backtest it and you understand something by looking at charts for JPY pairs, then I'm happy for you. But what I like to see using these concepts with the kill zones and the Asian range is mostly for Euro USD, AUD USD, GBP USD, GBP AUD, GBP CHF, Euro CAD, GBP CAD, and Euro AUD. And if you want USD CAD, USD CAD, yeah, maybe NZD USD too, but I would prefer USD CAD. So get these indicators in your chart, start backtesting, start getting your eyes trained. Here we see another example of London. Is this one that we saw already? I don't know, but since we're here again, I'll just mark it out. London manipulation for push to the downside, and then New York reversal. But if you catch this trade already, you can be done for the day. Stop loss just above this, or maybe above the high, or maybe you have lower time frames confirmation. You can catch a 1 to 3, or more aggressive 1 to 5, or if you go to the 1 minute time frame, you can catch even more. But we will see the entry types later. You will understand what's going on. I won't show you the other pairs because it is pretty similar in all of them. Maybe GBP is a little bit crazier because GBP can move a little bit more, but still same concepts apply. Now, what happens when you see something like this? This needs to be talked about. So as you can see, the Asian range is usually just a range like this one. What happens when you see something like this, which is huge? Let's see how many pips it is. 60 pips, 60 pips Asian range. You don't want to even look for the same concepts if this happens. So if you get on your chart on this day, I don't know, 22nd of November, and you see something like this, if you see something like this in the future, don't think about these concepts that I'm teaching you in this video, because these cannot be applied when the Asian range just trends and goes crazy like this during night. So you want to see an Asian range more like this. This is already a little bit more crazy, a little bit more bigger, so not really usable for what I like. But something like this is perfect. Something like this can be already a little bit big, as you can see. Here, perfect Asian range, London break, retest, London break, retest, continuation, okay? This needs to be used with the direction of the market, with supply and demand zones, with liquidity, and so on and so on, okay? Here, acceptable, like, for example, here, no, too big, okay? Too big, 80 pips, huge, okay? So look for these things, understand how every pair is different. I can tell you right away that GBP pairs move more than other pairs usually, but just look for the shape of the Asian range. So this is fine, this is perfect, this one is perfect, London manipulation for a reversal, perfect. Then what do we have? Here becomes a little bit trending, as you can see. Here already a little bit bigger, but not too bad. Here perfect. Just showing you what we like to see. Here is not bad, but it's a little bit bigger, but it's not bad, of course, you can use it. All of this, acceptable, acceptable. Then here, acceptable, London manipulation to continue. You see these things almost every single day. Good, Asian range, London manipulation to the upside, 1 pip above the Asian range, and then we continue to the downside. And we were in a downtrend, just to make it clear. So yeah, as I said, always keep in mind that these concepts need to be used with everything else that you are learning in this course. You cannot just get on the chart, put your Asian range, put your session indicator, and then you're like, okay, we are in an uptrend. So I don't know, we are, for example, in a downtrend. So if I see manipulation during London, I will just enter sells. Asian range, manipulation during London to the upside, maybe I will just enter sells right away. No, that's not what we do. You want to look for liquidity. Maybe we have many, I'm just doing examples, it's not the case here. Maybe we have equal highs, maybe we have, maybe we're not at discount, maybe we're not at premium, maybe you are just selling, and maybe we're not even at a supply area or demand area. So you need to use these things first, so liquidity, market structure, supply and demand areas, understanding if supply or demand is in control, and then you use this for a better understanding and for confluence with your trades, basically. Thank you for watching. I'll see you on the next video. My friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free because here in the description below, you will find a link to actually get access for free. I'll see you soon. All right, welcome everyone. Here we are with the Asian projection video and how to use it. So first of all, in order to do these projections, I use my Fibonacci levels, and you can just open them and just copy, take a screenshot, pause the video, just copy my levels. And now I'll explain you why we use this, how they can be useful, and so on. But before continuing, I always need to say the same thing that you keep hearing in many of these videos, especially the ones with the Asian range and with the kill zones, which is that this stuff, if it's not used together with market structure and direction of the market, supply and demand levels, liquidity, and so on, and all this other stuff that you will find in this course, then this is not useful at all. You cannot just throw this Asian range indicator on your chart, use the projections, use this projection together with the kill zones, and you think that you can be profitable. No, I mean, you can definitely get some good trades because you saw that we can have some consistency by using these, but this is not enough to trade. So make sure to watch the other videos. Those other concepts are what we really need in order to trade, and then this is for better understanding and more accuracy in markets. So Asian range, you know what it is already. Kill zones, you know what they are and how to use them already. Projections, what are the projections, how to use them. Now the projections are these fib levels which just help us understand and project the Asian range. So basically what you do is you take your fibs with the projections. What you can do, by the way, is just right click template and you save it, so you can switch between your different fib levels really quickly. Our fibs for entries, the 0.5 Fibonacci. I use also the 0.5 with the background just in case it's more clear. And then you have the projections. Now, how to draw them? You just draw them from the high to the low of the Asian range. Now, which way though? Which way do you need to draw them? In this case, we have the projections to the upside. Of course, you can also draw them to the downside, so the opposite way. But it all comes down to where you are trading. If you are bullish, if you are bearish, if you're looking for buys, if you're looking for sells, where supply is, where demand is, and so on. Because what we basically need this for is that if the market is bearish overall, and then we start ranging, let's say this is the Asian range, and up here we have a supply, okay? What you're looking for is a manipulation, possibly during London or New York, of this range, well, during London mostly, to then continue. And guess what you have? You use the Asian range projections to see if they correspond to this level, okay? So this is basically what we use them for. Now, you will see some that they are pretty consistent. Here, in this case, this is an example for both buys and sells. So overall, please keep in mind that we are bearish, okay? But here we did have some setups for buys too, quick buys, small buys, breaker structure to the upside. Where is the demand that creates the breaker structure? Demand down here, okay, hard time from order block. I'll just show you the overall analysis just to make you understand. And then you have Asian range projections, perfect 1.5 projection, which is basically half of the Asian range projected here, we perfectly touch it and then go to the upside. Then keep in mind we are overall bearish in the market. We already mitigated this supply right here. We already broke to the downside here. Okay, we already had the break structure to the downside. Where is the supply that creates the break structure? It's this whole big ass candle, but up here inside the week we probably have a 5 minutes. Well, let's just check it. 5 minutes. Oh, not 3 minutes. Not even. And I'll use this candle, the last red candle before the drop. Let's see, 1 minute. This is kind of weird. This is very, very big. Let's see if we can refine it. Okay, it's this whole candle to the upside, last up candle before the down move. So that's our supply. And let's go back to the 15 minutes just to show you the projections. Okay. And then, so since we are overall bearish and so on and so on, so keep in mind you always need to do your analysis, liquidity analysis, supply and demand areas, unmitigated and mitigated, market structure, okay, all of these things. With your Asian range projection, and here we can see that we correspond to our 2 Asian range projection. Of course, we weak above it, we almost reached the 2.5, but I would say that overall we respect the 2 level. Now, when you're looking to trade these projections, what I usually like to see is just a projection that corresponds to a grab of liquidity, so grab of liquidity of the Asian range or of, you know, equal highs or whatever, and that is reaching a supply or demand level. So a projection that is inside a key area that we want to trade. So projections come last, okay? They are the last thing we will look for, not the first. Now here, of course, we have a good example, but market is overall bearish, so I wouldn't look for these buys. Just to make you understand the Asian range, I'll put it into perspective here. We just reached the 2 level, okay? So it's just one projection of the Asian range, but we will not look for this trade because overall we're bearish. I'm just showing you. Here, nothing, we don't really have a manipulation to the upside to then drop, and we are bearish, so I didn't put it. Here, another good example, okay? Overall, we're bearish. Here, Asian range, manipulation of the Asian range, 1.5 projection, and then we drop. Here, perfect. Here, we have the Asian range, manipulation to the upside, and continuation to the downside. But as you can see, this manipulation to the upside doesn't reach, and this is why I put this, doesn't reach the 1.5 level. And this is just to say that, as I say on every single video, trading is not 100%, it's not a science, and you will not see the same thing every single time. So maybe in this case, you will feel like you missed a trade. But now, why did you miss a trade? Here we had supply, let's see, and we didn't reach it. So for me, it's just not a trade. This doesn't meet my plan. I will not enter this trade at all, right? Because we didn't even reach the zone. And plus, if I was going to trade this, then I would probably look for the 1.5 projection. Here, nothing, since we didn't really manipulate and we were bearish overall. So I was looking for a move to the upside to then continue. So I didn't mark it out. Here, perfect. 1.5 projection, we touch it, continue to the downside. As you can see, always London kill zone. Here, why did I mark this? Because this goes for both buys and sells. What would I look for overall? I will look for buys because we are in an uptrend overall. No matter that later we reverse and continue to the downside, but overall here we are bullish. Here we have our demand area. Here we have our Asian range. We put the projections. Okay, what do we reach? The 2 projection, and then we continue to the upside. So this could be a buy trade, and of course here we need to look for confirmation. But at the same time, if we really wanted to trade the London kill zone, which is not something I would recommend to go against the trend, so it's not something I will recommend at all. We have the opposite projection, and I think we reached the 1.5. We do reach the 1.5 perfectly, and then we drop. So as you can see, we went both ways. here, Asian range, overall, we are bullish, okay? We have the Asian range. Asian range is manipulated during London, so London manipulation. Down here we have demand area, which corresponds to the 1.5 projection. What happens? We don't reach it. So this is a missed trade, okay? But again, you see how it all lines up. Down here, I didn't put it since we were overall bearish and we didn't have a manipulation to then continue. We just went to the upside and didn't respect anything. Probably here never had bearish confirmations. Here we are overall bearish. As you can see, these lines up perfectly. Supply, okay, supply above the Asian range, London manipulation reaches supply, reaches the 1.5 projection, then we drop. Perfect trade, okay? See if we have some more. Here, for example, we didn't have the manipulation, so I didn't mark the area, the projections. Here again, the reason why I'm not marking some of them is because they're either too big, so this is too big and I'm not going to consider this, or because there is just no confirmation. For example, here there is no manipulation to the upside. I will never look for buys, so I will never draw them this way, okay? Because some of you might do that. They might say, oh, okay, down here there is demand corresponds to, and I think I need to talk about this because I know some people will do it. Down here we have demand corresponds to the 2 projection, and I will look for buys. I will enter buys, and then you hit the stop loss. Why? Where is the market going? Here, it's going to the downside, all right? Break of structure to the downside. We are bearish, okay? We are expecting a pullback into what? Pullback into a premium area. Here we do reach the premium area and then we continue to the downside. So why would you look for buys down here? It doesn't make sense. And I didn't put my projections to the upside just because here we didn't have the London manipulation to then continue. If we did, then this would be just perfect. Let me put the projections. Perfect to the upside. Where would I look to trade from? Probably from here. Okay, perfect. So just to explain why some are marked and some are not. Same here. This would be a perfect, London manipulation at Asian range projections, but I didn't even mark it out. Why? It's perfect to the 2 projection. Why didn't I mark it out? Because we are bearish. Here we broke structure to the downside. We reached supply, rejected. We were going to the downside. I will never look for buys from here, even if then we went bullish, but we're not trying to predict random stuff. We want to trade our plan, and our plan wants to go with the trend. And this will be, from here, we would expect a new lower low. So this is will totally be against the trend. Well, anyway. Here we're trending too much. It's not an Asian range that I'm interested in. Here, Asian range. Where is the direction of the market? Market is overall bearish. Asian range, manipulation to the upside, 1.5 almost, and then continuation to the downside. If you don't get this entry, we create a new lower low, we retrace to supply another entry, okay? Just to make it understand. I believe these concepts will help a lot of people. Actually, I'm really happy that I'm sharing with you finally this stuff. Here we can mark it out. We just didn't go enough to the upside. Here saying we are bullish overall, so I wouldn't consider this manipulation. This is just a technical direction to continue. We are bullish. Did I have some other examples, or are we done? Because otherwise, yeah, we're done. ADUSD. So AUD USD, let's see what's going on. Perfect. AUD/USD is overall bearish, right? Or if I zoom out, you can see what I'm talking about. It is overall bearish. Yeah. Okay. So perfect. Here, Asian range is too big. We will not consider this. Here we have Asian range. This is actually today. Projections, we reach the 1.5, we wick above it, but overall you can see the 1.5 is respected. We don't even close above it. And unfortunately, there was no supply that corresponded to this level, so I was not going to trade it. It doesn't meet my plan, but I would have looked at this area overall. Sells from here, 2.5 projection. We reached this area to continue. Well, that didn't happen, but as you can see, projection was still respected from here, but it's not a trade that I would be interested in. Here too big, okay, when we're trending this much, just too big. Here nothing happens, we just range. Here, perfect. Where are we? We are bearish. Overall market is bearish. We use this high as liquidity, also because this high didn't really break structure. This broke structure. This high didn't break structure. So this high is liquidity. Up here, we will have supply. Again, we didn't reach it. I will look for a trade from this level. But anyway, you can see that the Asian range projection from here was respected. It just doesn't meet my plan, because my plan is to trade from supply and demand levels. Too big, this one too big, okay. Now here, Asian range projection, perfect. Where is the direction of the market? Breaker structure to the downside. Supply level. Why do I take this week too? Because a supply level or demand level, well, a supply is the last up move before the down move, and a demand is vice versa, the last down move before the up move. And this week is basically an up move before the down move, so that's included in the supply. Anyway, supply, direction of the market to the downside. This is a broad structure. 1.5 Asian range projection, perfect entry, continuation to the downside. This is an intraday trade. As you can see, you close it by the end of New York. And then just since we talk about everything, I'm including also other stuff in this lesson. Then what do we have during London close? London close, pullback. But anyway, where can you have your target? Just use this low as liquidity. Okay, liquidity low. Because what does the Asian range have? As I said in the first lesson, it has liquidity above and below it. So we get an entry above it because of the direction of the market, of the order block, of the projection. What do we target? The other side of liquidity that the Asian range has. So the lower side, we just touch it, grab liquidity, and then what happens? We come back, which corresponds to London close, kill zone. So it all comes together. It all makes sense. Where's the direction of the market? To the downside, break structure. Where's the supply that created the break structure? Supply. Asian range projection. 1.5. We had a trade. In this case, we don't hit take profit, but by the time we are down here, you are break even already, and then we hit your break even. But as you can see, it lines up. Asian range, where's the direction of the market? Is bearish, order block, last up move before the down move. Refined is just this candle. This is the overall order block that you could find on the 1 hour or 4 hours. We don't reach it anyway. But let's see if we reach the week. No, we don't. Doesn't look like we do. Anyway, 1.5 Asian range projection here. Asian range projection in this. Oh, the reason why I marked this out is because some days can just help you identify the high of the day. So in this case, we reached the 2 level, but it's already the end of the day. You can just, if you're trading the London close, you can just still use the Asian range projection to say, okay, we are in the London close. I will trade against the trend, so I know that it's risky. Remember that always. I know that it's risky because it is against the trend, but we are at Asian range projection. We are inside the London close kill zone, and maybe we have a confirmation for a reversal. Yes, here we break the previous low, okay, and then we can get some entries. I wouldn't take this trade, but I'm just doing the example. Asian range projection, again, I wouldn't take this trade because it is against the overall trend, but just to show one London manipulation, 1.5 projection, and then we continue to the upside. Let's see if we have some other examples. Asian range projection, this is just perfect. Overall direction to the downside, breaks of structure, where supply, which breaks again the previous structure. So we go to the upside, break structure here, supply, Asian range projection, 1.5 Asian range projection. Here we just touch it and drop. Okay, so I think that of course doesn't happen every day. Sometimes it's not respected, but I think that just by looking at this video, you can understand that it can really give you some consistency, some more accuracy, and it can really be helpful. Now, as everything else that you will see in this course, you need to apply these concepts, backtest them, not to understand if they work, because they do work. I'm using them, they do work. I can guarantee that they do work. Just to get your eyes trained to see these things, because I can see them more quickly just because I've been trading for a long time. But you need to get used to seeing certain things. You need to get your eyes trained. So that's really important. Go on your charts, backtest these concepts. Right here, I'm just showing you when I say backtest, actually go and replay and backtest these concepts. You're here, you see, okay, we're bearish. I have the supply, here is the Asian range. I have my projection. Where do I want to enter? Well, probably at the 1.5 projection. I go, let's see what happens. 1.5 projection, we reach it. Okay, we reach it. Then I go on lower time frames for confirmation. Let's see what happens. Lower time frames for confirmation, we are still overall bullish. Now we break the previous demand, but maybe I want to see this demand to fail in order to be sure. Let's see if that happens or if we hold it. Initially we hold it, we keep going to the upside, we have another break structure. So now I don't need to see this low being broken, but I need to see this low being broken, or actually this one, because we just broke structure again with this move. So I need to see this low being broken. Let's see if that happens. That happens right here. You can either enter the trade right away, but it's a little bit less accurate. Or what do? We start waiting for a retracement. Okay, retracement is happening. What do we put? 0.5 premium and discounted. And here you have supply. Sometimes we reach supply. Actually, I would take the last small candle before the big move. So I would just enter the 0.5, short position, sell limit, stop loss above this level, 6 pip stop loss, okay, target below the Asian range. Here we need to readapt what's going on. So readapt also my entry, I'll probably put it. No, I'll still leave it there because we have liquidity high and so on. Let's see what happens. Perfect. Entry. All right, this can be way a bigger target. I'm just targeting the Asian range low, but it can be way bigger. Let's see a possible target. I didn't even look. Possible target can be just below all the lows because we are targeting a new lower low. So below these lows, okay? Then 1 pip below them or just before them, okay? This is almost a 1 to 4. We can have bigger restored ratios, yes, for sure. But still, I would say this is good. How can we have bigger restored ratios? That when we reach our entry area that we were thinking about here, we look for the same thing that we were looking on the 5 minutes, but we dropped to the 1 minute. So what happens? We're still bullish, still bullish, still bullish. What area do we need to break? We need to break this area? Well, this is going to be the video about the entry types, but since we're here, I'm just showing you live examples. This area, push to the upside. This area is broken. What do? Premium and discount. Let me just put with the background, premium and discount. Now, with the background, we cannot see anything. Here we go, premium and discount. Can we get the preferred entry from this? Let me delete the previous entry. Well, actually, let me delete the previous entry. Can we get the preferred entry from this supply? We can. Can we get still a good entry, but not that accurate? Of course we can. We just enter the 0.5. Stop loss above this, 3.5, 3.3, just above the previous high. We have confirmation that we are reversing. Same take profit, and this becomes a totally different risk to reward ratio. This becomes a 1:7, almost 1:6.7. Anyway, just a quick explanation for the entries, but as you can see, we basically looked for the same exact things here on the 5 minutes, here on the 1 minute, after we had confirmation that the 5 minutes was playing out, okay? So this is how we combine Asian range, direction of the market, supply and demand levels, projections, and entry types. Thank you for watching this video. I didn't prepare this type of entry. I just saw that it was going on. I did the replay, and this is what we look for in the market over and over. We will get some losses. Yes, we will. But with this type of risk reward ratios, 1:4, 1:7, we can get also bigger risk reward ratios, then we will be fine. Thank you so much, and I'll see you in the next video.
Now you might wonder, okay, Edward, I understand all of these concepts, I understand order blocks, I understand liquidity, I understand Asian range liquidity, I understand the times of the day, I understand the days of the week, I understand all of these type of things, but which setups are we actually trading? Well, it is time to actually talk about the type of setups that work best for our strategy. Get ready to take notes, because this video is going to be extremely important.
Hello, what's up everyone? In this video, I will show you my favorite setups and the ones that we want to trade and the ones that we want to avoid, all right? Now, there are, of course, different setups and different entry types, and we will need to combine both. In this video, we will only talk about the overall setup. So keep in mind that we will not talk about the entry, but we will talk about the overall setup. So no lower timeframes, but mostly higher timeframes, points of interest. So what do we want to trade? We obviously trade from our areas of interest, which are usually order blocks, which are supply and demand levels. So if you don't know how to use them, go back to the supply and demand videos to start understanding how to use them. Now, of course, these areas have different confluences, and some areas are better than the others. I'm already giving for granted that we are trading together with the trend, or if we are going against the trend, we are at a discounted area and that we're targeting premium. I'm giving for granted that you know the direction of the market, you know that if we are at premium or discount, and so on and so on. These right here, I'm talking only about the setup by itself, and also that you know if we just broke structure, which order block broke the structure, and so on. Okay, with that being said, I gave some grades. I will put a bigger writing for now. Okay, I gave some grades to each setup so you can know if these are tradable or if they're not tradable. So let's start from the ones that are not acceptable in our strategy. So if we just have an order block, we don't want to trade that area, meaning that if we have push to the upside and we just reach the order block like this, we don't want to trade from this area because this is just order block. Okay, now
Second case, and these are both F, that's why, because it's not acceptable. Second case is that we have order block plus imbalance. Okay. So here, for example, we have imbalance and we have order block. We reach it. This is still not acceptable to me. I just want to focus on high probability setups. Okay. Now, which are tradable, which are acceptable? Let's start now from the best one, which is the best one, as I said already. So let me delete everything. This means that there is an order block plus imbalance plus previous high-low type 1. Okay, what does this mean? First of all, well, I'll just show you. So we have order block with imbalance. Okay, we come back. Okay, so we have order block, which is the one breaking the structure, and maybe we are at discount and so on. We have imbalance, goes from here to here, some imbalance. Okay, sorry, that's my cat. Anyway, I hope she doesn't start going crazy as usual. What do we have? Previous high-low type 1, which is the best one. What does it mean? Type 1 is when we have the previous high or low, in this case, lows, both here, so inside the move to the upside, so this is liquidity, and also before reaching the key area, we build other lows to take out. This is the type 1, okay? Type 1 setup, type 1 previous high low, with actually 2 lows that are being taken, both inside the move to the upside and also just before actually reaching the area. So inside here and also here. Later we will see real charts examples from trades that I took and sent to the VIP channel. What is the type 2 setup of the previous high low? So of course we have the order block, so it's the same. We have the imbalance, so it's the same, but we have previous high low type 2. What's that? That is when we have only one of these two, basically, which is usually this one, to be honest. But let's just say that it's just one of these two. Okay, so we're going to the upside, we are retracing to the order block, and we have this. Basically, we have order block, we have imbalance, and we have previous low, but only here. We don't have it here, or vice versa. We only have this one, and we don't build the liquidity here when reaching. Okay, so this is already a B grade. Okay, so it's the A grade, the best one is this one, and vice versa for sells. The B one is this one. Let me just show you for some cells. So for cells, it's this one is like this, basically, with order block, with imbalance, and with previous highs. Okay, and the type 2 is like this. With order block, imbalance, and previous here and here, previous highs. Okay. Right. So these are the best setups that we can have. Okay, these are the best setups. When you will hear me talking in the lives, also on my Instagram or wherever, I will say that we are talking about a A setup, a B setup, a C setup, D setup, or F setup. If it is an F setup, we don't want the trade, okay? But in other cases, we do. We will just adjust the risk accordingly. But we will talk about this after the entry types, because we need to combine this with entries video. So A setup is this one here for buys and for sells. B setup is this one for buys and for sells, okay? Now, the C setup and the D setup is basically the same, but without imbalance, okay? Without imbalance, it's just the same, just there is no imbalance here. It's a little bit less confirmation, but still very good. Now, the C is...
My friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free, because here in the description below, you will find a link to actually get access for free. I'll see you soon.
With the type 1 previous high low, so this one, type 1, okay? The D setup is with this one or this one. And of course, it's still acceptable because it's still a D, which is acceptable. It is not an F, but it is more risky, okay? Until the C, so A, B, and C are all great, okay? Almost, I would say almost at the same level, okay? Of course, the A is better, the B is a little bit less, the C is a little bit less, but almost at the same level. These are good, okay? Now the D is good, this one is good, but not as much as the others. And the other two, I just wouldn't include them on my trading plan. Now let's see some real examples that I prepared. So the setups, these are real trades that I posted on my Instagrams and on my Instagram, and also these are real trades that we took. Actually, this one no, but all the other yes. So what type of setup is this? We have order block, we have imbalance here. If you don't know what imbalance is, go in the 1.0 content and go watch the imbalance video. And we have previous low here, okay? As we were saying, order block, imbalance, and previous low. Order block, imbalance, and previous low. Type 2, you will get used to this, especially if you keep the things on the chart. I will show you right now how to do it. It's a B setup, so it's good. Now, how to do it? 1 second, I'll show you. Here, when you create this, you can just put a box. You select the color, you double click and go on text, you put the text and you write inside this. And after you write inside it, you right click, template, save as, you put a name. So the times after, when you open your chart, you can just draw a box, right click, template, where is it? Setups, and there we go, and you have it, okay? And you just keep it on chart to have it with you. And of course you will delete, but it's really quick to do. This template setups, and you have it, okay? So you always have it under your eyes. Let me go back to here, perfect. So this is a B setup, okay? Now here, for example, let me see, here we have order block, no imbalance, but we have previous lows here and previous low here. So I would say it's still, in this case, a C setup, order block and previous low type 1, both here and here, okay? Here, perfect. We have order block, no imbalance because it was already closed by this candle, so only order block, previous low inside the setup and previous low before taking it, so 2 lows. It's a C setup, order block plus previous. Just take a picture of this while you're listening to me explaining this so you can compare. Okay, so you have two previous lows, so it's a type 1 previous high low, okay? Order block, so it's a C setup. Now here you have order block, imbalance, and almost no previous high lows. Here you actually have it. Depends if we zoom in, maybe if we go on lower time frames. But this to me is almost unacceptable, I would say. Yeah, I would say this is an F. So it's not a trade for me. Here, order block, imbalance here in this candle, previous low inside the setup and previous low here. So it's an A setup. This is perfect. Order block, imbalance, previous high low type 1, A setup. Here, order block, imbalance on the way down, previous lows here, but previous lows type 2, because there is no previous high lows. Well, actually there is this one. So it could be, actually, sometimes you have to interpret it a little bit if it is a type 1 or type 2. I would have liked to see something right before the order block, but we actually do have these previous high lows also here. So I will consider this a previous high low type 1 actually. So order block imbalance, previous high lows type 1. This is an A setup. And I'm not talking about the entries, I'm just talking about the overall setups. Now here we cannot really see, but we have order block, previous highs. We don't know if there were previous highs also on the way down, but I assume there is, so we can consider these two. So previous high low type 1, order block, we don't see if there is imbalance, but you get the point. I cannot really classify this setup, but is for sure acceptable. Okay, order block, previous high on the way down, previous highs here, okay, and imbalance, not really because it was closed, so we don't have imbalance. It's a C setup. Here, order block, some imbalance that was closed later, but still this candle has imbalance, so perfect. Order block imbalance, previous highs, previous highs also here. This is an A setup. Now here, what do we have? Let me see. Oh, I took this, wait, because I wanted to talk both about this and also about this. Here we have, okay, perfect. Order block, imbalance, and previous lows here, but previous lows type 2, okay? So it's a B setup. Order block, imbalance, and previous lows in this case type 2, because there is only this. We don't build also lows here before taking them out. And also in this case, trendline liquidity, which can be helpful. Now, for the sells from up here, we have previous high here, order block, imbalance. It's an A setup from up here. But of course, we need to check the direction is to the downside and so on and so on. I'm just giving for granted that we know where the direction is and so on. Here, order block, previous high also here, imbalance, A setup. Here, order block, previous high is only here, not really on the way down. Imbalance, some imbalance left behind on this big candle, okay, on the way down. So it's order block plus imbalance plus previous highs type 2, because it's only here, there are no here. And it's still, these are all good. These are all good examples. I'm just showing you. Okay, here we have order block, imbalance, and previous lows type 2, only here and not inside the setup right here, only here. Okay, so it's still acceptable, but it's a D setup. So maybe we decrease our risk. But we will talk about this later after the entry types video. The main concept is that for A, B, and C setups, we go with full risk. With D setup, we go with half risk. And F, we just don't look at them at all. Here, highs, so order block, imbalance, highs on the way down and highs also here. This is an A setup. Here, order block, imbalance was actually closed, so no imbalance. Previous lows here and previous lows here, this is a C setup. So because it's a previous lows type 1, both here and here. Here we have order block, imbalance, previous lows here and previous lows also here actually, because it's equal lows. So this is an A setup. Here, order block, imbalance, previous low on the way up, previous low also here, A setup. Let me see, perfect, order block, previous low here on the way up inside the setup, inside the movement to the upside, previous lows before the entry, so we have type 1 previous lows. Some imbalance left behind. I will need to look better, but yes, this candle is definitely leaving imbalance, even a little bit, but still. So this is an A setup. Here, I didn't put this to include this. Don't look at the trade, look at the setup. Order block, no imbalance, so no imbalance, but previous highs here and also previous highs here before taking them out. So this is a C setup. There is no imbalance, so this is a C setup, but with previous high-low type 1, okay? So yes, C setup. Here, order block, imbalance, equal highs here, but not really on the way down, but also equal highs here. So still two type of equal highs. I would have preferred, as you know, on the way down, that here we have some a high, okay, that we take out on the way up, but still this is an A setup. Here, order block, already mitigated, so not really the best example. Let's take this entry. Let's not look at my entry as example, but let's look at this entry. Order block, some imbalance on this candle, especially this candle right here, even by a little bit, but still imbalance. Order block, imbalance, previous high here. This is a B setup because it is a previous high type 2. There is no previous high here, okay? Order block, no imbalance. Previous highs here. Order block is not mitigated at the 50%, is only mitigated at the start. Early sellers, so previous high. So we have type 1 previous highs because we have both here and here. Okay, but no imbalance, so it is a C setup. And that's it. These are all the examples. All right. So practice this. Keep in mind, for A, B, and C, we go with full risk. For D, we go with half risk, and for F, we just don't trade them. Now, this is a general. When I say about the risk, is general because we will need to combine this with the entry types, because the same way we have ratings for this, we will also have for the entry types. We will have the A entry, the B entry, the C entry, and just F entries with not acceptable entries. So depending on if we have an A setup with an A entry, we will go with full risk. B setup with an A entry, we will go with full risk. And then I will just do a video with the correct risk management, depending on the rating of the setup and rating of the entry. Thank you so much. I'll see you in the next video.
You know, one very important thing that I struggled with for a very long time when I was trading was that I understood which setups I wanted to trade, but then I had to also understand my entry confirmations. A lot of traders just get to the point where they understand patterns, they understand certain concepts, but they are missing the moment in which they need to pull the trigger in order to really enter the trade and profit from the market. So if you don't have a exact moment in which you understand whether to enter or not a trade, this video will be for you. We're going to talk about the entry types that we're going to look at. This video is a pretty, not basic, but a starting video about our entry concepts, and
I can assure you that in the future there will be way more videos about this, but let's get started with this because it's extremely important in order to put all of the pieces together and have a complete strategy. Let's go. What's up everyone, how are you? In this video we will talk about the entry types only from a theoretical point of view, so here, and in the next video I will actually show you how to see them on charts and how to look for confirmation and how they actually look on real charts. But on this video is just here. So the same way as the setups, we have A entries, B entries, C entries, and D entries. And in this case, I would personally go with A and B entries with full risk and C and D entries with half risk. I didn't put F entries because anything that doesn't look like the ones that we will have here, we will just avoid. But of course, in another video, again, in the future, there will be also the explanation of how to actually use the risk management, because the setup can be a D setup, but we can have an A entry. So in that case, what risk will be used? Don't worry, that will be explained later in the course. So A setup, this is our favorite entry type, okay, where we are, of course, always keep in mind that we are at a key area. We are at an order block, at a setup that we saw on the previous video. With that being said, this is for the entries on the 5 minutes or 3 minutes or 1 minute. Before actually starting, I want to give you a general rule. Of course, it is not 100% of the times like this, but most of the times. So if we are at a 4-hour order block, we use 15 minutes. Wait 1 second. Where is it? Nope. Here. 15 or 10 minutes chart confirmation. Okay. If it is a 1 hour order block, we use 5 minutes or 3 minutes confirmation. Okay. If it is lower, sometimes you can see me use a 15 minutes order block. 15 minutes OB, not lower than this. I don't use areas that are lower than 15 minutes. Then I use 1 minute confirmation. Okay, sometimes you will of course see me go on the 1 minute, also on the 1 hour. In fact, this is a general rule, but most of the times it is like this. Okay, so first of all, we start from this because these are the lower time frames. So we are at a setup at a 4-hour, 1 hour, 15 minutes order block, and these setups right here, these entries are at one of these time frames. So what we want to see is on our A setup, which is our favorite one, a consolidation, okay, a manipulation, and then that we break the low that created the manipulation. Now, this will be more in detail and with different type of entries inside here on another video, but here you can see we break the low that created the manipulation. So we create the manipulation. Where did the manipulation start? From here. We put our premium and discount, and we sell possibly at a supply at premium in this case, or discount in this case. Okay, and this is our favorite setup. This is our favorite, not setup, sorry, favorite entry type. Okay. Now, still B setup, B entry, actually B entry is pretty similar. It is basically the same thing where we have consolidation, liquidity grab, okay? We go to the downside. Going to the downside, we never reach back premium, okay, to sell, and we create trendline liquidity or some type of liquidity. In this case, it's trendline liquidity. We grab it, come back, and continue to the downside. Same thing here. This right here is a different type of liquidity, but basically what we have is consolidation, manipulation, break of structure. Okay, we break structure and we break the low that created the manipulation, which is the most important thing. We create liquidity, different type of liquidity in this case. Okay, so liquidity right here. Order block at discount. because we have never reached discount with these moves for continuation to the upside. Okay, this is our B entry type, and it's still very, very good to me. Then we have our C type entry, where we have both to the upside and downside, just an uptrend without any real accumulation or grab of liquidity. And then we change direction. We look for a retracement to possibly continue. This computer is getting slow. I might start using my Mac anyway. And as always, supply, demand, premium, discount, and so on. Now, on this, the only thing is not necessary because this is the type of entry, but one note that we should write down is that this last move before we reverse, so after the reverse happen, I want to see this move be strong. So big move, not necessarily big, but bigger than the previous ones, usually like one big candle and then we reverse. Okay, same thing right here. This last one, possibly a big one, because usually the market, what it does is that it gives one last big push when it's almost done. It's like the exhaustion. It gives the last move and then it finally reverses. And then we have our last entry type, which is still good. It's just less risk. Okay, still good because everything else than this will be an F. Everything else than this will be an F. So all the ones that you see here are acceptable. Our D entry type is just a pending order at the zone. So we have the setups from the setup video. We have A, B, C, D, and F setups. But the entry is just with a pending order at the area. Okay, with, for example, for sales, just just stop loss above the area and take profit, and next depending on where we target. Okay, so just pending order, basically. This is our D type of entry, of course our least favorite because we might not have confirmation. So where do we use this? On the higher probability setups. So the A setup, the B setup, and I'm talking about the setup video. Wait. So we either use it on the A setup, the B setup, or possibly also the C setup. And on the others, I wouldn't use this type of entry. Okay. Thank you for watching, and for the real charts explanations and breakdowns, it will be on another video. I might actually create a PDF, but with time about these type of entries, so you can print them out, or you can do it yourself. Well, I'll actually put it on the course, but what I'm saying is, if you prefer to do it in a different way because you prefer to do it yourself, you prefer to mark it out yourself and maybe write more things, then of course you're free to do so. Thank you.
What is theory without real examples? Well, let's actually look at some real examples of a trade that I actually took in the past. I believe it was 1 year ago I took this trade. It was probably more than 1 year ago, but I remember exactly this trade, and it's time to actually see the breakdown of this trade. This was a very good example of a type of confirmation that we wanted to see from a key area that we wanted to trade from. So let's look at this example and be ready, because in other videos in this channel, you will see way more examples about our entry types, about our setups, and about in general on our strategy.
friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free because here in the description below, you will find a link to actually get access for free. I'll see you soon. You will see the trades that I've backtested. This file is about higher time frame point of interest, only 1 hour point of interest. It's not really about seeing if it's win or loss, but it's about seeing which areas are the best. And the areas that are the best are areas that manipulate. Now, what does this mean, that manipulate? So let's see, for example, JPAUD on today's example. By this, when I say areas that manipulate, it means that first I make this example. So, for example, there is a range. This happens, everyone thinks that we're bearish, and then bullishness continues, okay? Now, this area that manipulates this is best order block in order block selection. So once we come back, this area is really good, okay? Because it manipulated. So every area that makes people think that we will go bearish, so it induces people to go into sales and trade also from this supply, you know, and then with stop loss, this area works the best, and you will see that in the backtesting file. Now, example on today. Let me go to the 1 hour. So this is not from today. This is from last week. Why did I take this higher time frame order block? This higher time frame order block broke this area, made everyone think that we were bearish, and then broke structure. So manipulate and breaks structure. Then it's great. Now, why is this area good? Why did I take this? On the 1 hour you can see it, but you can see it better on the 30 minutes. It looks like we break the previous low.
Yes.
And then we break structure to the upside here. These areas are the best areas, okay?
Okay.
And in fact, we respect it. Now, you can tell me that you are having difficulties on lower time frames. Reason why is because you are waiting for spring. So spring is not like seeing a spring is better, but it's not the only thing we're looking for. We're looking for a change in direction. So here we reach our point of interest. I go to lower time frames on 5 minutes. And what do we see? A change of direction. We were bearish, so you need to see who is in control. Is supply or demand in control? Here, let's go back with replay, okay?
Yes.
So here we have break of structure. Means that we need to break this structure to go bullish, okay?
Yes.
We continue. We touch into the area, we have new break of structure, kinda, yeah. It means that we need to break this area to go bullish. Does it happen? We respect it. Touch into the area. And here what happens? We
broke it, yeah.
We broke it. Now, where do we look to trade from? We look for demand. So supply fails, demand is in control. 15 minutes demand, we trade from here. Okay?
Okay.
And this was my confirmation entry. Just looking at market structure very, very closely. You need to look where we broke structure and which is the point in control that broke structure. So here, this was break the structure to the downside, but we need to break this to actually go bullish. Now, we have a retracement. We break again, means that here we have break of structure. This is in control. Here we break it, means that it's not all the times, but most of the times, this is in control. And this was our trade from today, from here. And now I closed it when we were talking. I closed it here. This was the trade from here. In this case, pending order, stop loss, take profit.
Okay.
Okay.
I think my my worries or my difficult is I wanna do not that I want to, but in my brain it's like the whole concept, you know, like from the whole cross is in my brain, and I'm like, oh no, I'm forgetting like about the range. I'm forgetting like about this. I
Now
can put
you,
this in the concept, and I think that that's the problem why I'm getting confused then.
yeah, just make sure that you look closely at market structure, not on the 1 minute, because 1 minute is a little bit more crazy, it can change more, but maybe on 5 minutes you look at market structure for confirmation, and you need to look where it breaks and which point is in control after breaking. So breaks, point is in control, breaks, point is in control. We break the point in control, means that probably demand is in control, so demand, okay? Now,
Yes.
keep in mind that here, for example, we had break to the downside, and this point was in control. Okay, and we break it to the upside. So you might think that we will take buys from here. You know, the reason why we don't take them is because we never reached the key area that we wanted to trade from. So you only look for lower time frames confirmation after we touch it. So this point is in control. We touch key area. We don't break this point, so we have no confirmation. We come back to the area. We break the point. Now it's time to enter. Here it wasn't time to enter because we didn't reach the key area, which is this one. You know, this 50.
I understand. I
If
get
we
it.
don't
So
touch it, it doesn't make sense to look for the confirmation.
yeah, just to make only clear in my head, like normally I'm looking at the chart and at the trades like with the market structure, with supply, demand, and all these things, like the understanding of the market. And only like in a few cases, if I see that the spring just happened, or if I see, oh, it looks like something like spring can happen, something like a selling climax and all this stuff, or yeah, then I get on this concept. Am I right?
Correct. You
Okay.
start high time frames once we reach your key area. So as you know, look at the high time frames selection on
Yes.
the testing file. Once you are good at selecting the areas, and you can see that you can just trade with key areas, basically. For more confirmation and better trades, then you will learn about lower time frames. But you look at lower time frames only after we touch the key area. Otherwise, you don't look for lower time frames confirmation up here.
Yes, but I think my fear is to go too early in the trade, because sometimes when the key area touched and I'm like, okay, we touched the key area, we turn in this case when we are when we are bullish and we're coming back bearish to the area, and I'm like, okay, we touched the area and then we are going bullish back. Then the only thing is, in some cases I go too early in the trade, and then some manipulation happens, and after that it goes in the direction.
Well, of course, sometimes, even if you have confirmation, we still manipulate again, but if you have a good key area and a good confirmation, paying closely attention to your to market structure and who is in control between supply and demand, then most of the times you will be correct. Now, let's see this example. This example was because we reached this key area. After reaching it, we broke structure to the upside, okay? And we came back here. Now, what happened over there? What happened here? Here, I went to the 1 minute, which I don't recommend you, but it was a small setup, so I had to go. I don't recommend, for now, stay on the 5 or maximum go to the 3 minutes, not 1. But I still show you the reasoning, because it doesn't matter if it is 1 or 3 or 5, it's the same move, okay?
Sure, yeah.
So here it was who's in control. This
Supply phase.
This breaks to the downside, means that this is in control. This is broken, demand is created. Okay, so it was either this demand or this demand. Okay, one, this or this. I entered from here and just put stop loss below this demand just in case we were going to reach this demand and then go up. Okay.
Okay.
But what you need to pay now, very, very important, is that look at this move. If this move doesn't break to the downside and stops here, that is not valid confirmation. This is not the point in control. Point in control is higher, okay, because it didn't break structure, which means that, look, because many people get confused.
Okay.
Okay, so if this happens, this is not confirmation because this is still, look at the break substructure. Break of structure is here, and here there is no, this supply didn't break structure. So this break to the upside is no confirmation. But in this case, what happened was that this happens, and for now, this is in control.
Yes.
Now, this happened right there and then broke. Since we had this breaker structure, it's little different, but makes the whole difference. Since we had this small breaker structure, now this is good confirmation and we can look to trade from demand. But small difference, but everything changes, okay? Good confirmation against bad confirmation. This is not confirmation for me according to our strategy. This is confirmation according to our strategy because this was the supply in control that broke structure. Here there was no breaker structure, so this is still in control.
So by 1 pip, when the when supply demand fails, it's like okay, then it's a confirmation, it's break of structure.
Yes, but the one that is in control, not just supply and demand, because this is
I know the one that is in control.
Yes,
okay,
correct. Yeah. By the way, I wanted to ask you, since we were doing this example, if I can cut a small clip of the last 5 minutes that we were talking, and I share it with also possibly in the course, because this is a good explanation of lower time frames, and I wanted to add more lower time frames content. Just the last 5 minutes. Of course, all the rest, no, just the last 5 minutes.
Sure, of course.
Okay. Great. Thank you, man. I hope this is helpful. Also, so for now, what you need is you start from the backtesting file. What you should pay attention to in the backtesting file is that the good areas are the one that manipulate. Just look at that a lot. Other than that, after that, you look, you backtest a lot higher time frames areas, which means 1 hour or maximum 4 hours areas, and then after some time you start looking at lower time frames confirmation. Okay.
Sure.
Perfect. Any other question?
I'm thinking about it a moment, but
it's no problem. Like if we do less time of call, like if we do now 30 minutes, you still you still have 2 hours and a half remaining for the next calls.
Yes, of course, I know, but only if there's some little thing, you know, maybe after the call, I 2 minutes, then I'm like, oh, I forgot it to ask. No, but normally not. I think the only confusion was about the 1 minute time frame, and that I want to put the whole concept inside the trading plan.
And it's good. 1 minute is pretty confusing, can change structure a lot, even if
I think that's why, because it's changed structure that much. And
I recommend to start looking for confirmation on 5 minutes.
Okay, so it's better when just for example, like the trade from today, when this happens and the structure turned back, like from bearish to bullish, like in 5 minutes, and supply failed, then I can also look from 5 minutes or 3 minutes. Okay, if this supply is holding, I can enter there and put my stop loss below it.
Yeah, yeah.
Okay.
Well, yes, sometimes there are two demand areas, like here there is one, and just below there is another one. Okay, we hold this one, but I still put stop loss below both, just in case we come to this one, you know.
Okay, yeah.
Because you never know.
Okay.
You cannot tell if we're gonna hold this one or this one.
Okay, then I will look at the backtest file, and if I have some question, what is the best way to reach out to you? Because I think I don't get the right Telegram number or Telegram contact from you, because I was texting you and it don't get out of Telegram.
Maybe it's best on Instagram, to be honest.
On Instagram, okay.
Yeah, I don't respond right away, but I do. I do respond.
No problem. When it's something important or something like this, I can text you also in Discord.
Yeah.
Okay.
Thank you.
Okay. No, I have to thank you, really. I have to thank you, because I was so confused the last days and the last weeks, and my brain was really exploding because I saw the psychology videos and all the stuff from the FTMO program. And to be honest, man, I was like the last weeks so hardcore self-isolated, and nice. I don't know, to be honest, what the world looks like outside. So yeah. I was like, okay, then I think I need one to make things clear in my head, that I have too much there inside, and only to make a good trading setup.
Yeah, but it's good. It's good that you put in a lot of work. You will figure it out. It's just, you know, it's a phase. Just stick to
it. Man, really, I want this more than everything. So I like really the last months and the last weeks, as I wrote you, I think like I'm in 1 year or over 1 year now with the Excel course and all this stuff, and I see like a lot of problems in life and all this stuff, you know, and I was like, okay, I'm never gonna get this, really never gonna get this with any job I gonna own, with any management, with any nothing. And I'm like, okay, man, trading is the only thing you have. Trading is the only thing you, it's cool and you like it and you love it. And I'm like, okay, then put all I have in trading. So that's the only thing.
Yeah, man, I really recommend you to, I know that you want to be profitable right now.
No, yeah, but the thing is, I know that the time is coming, because I'm thinking like, okay, the whole last year was only studying, and now like refining, you know, and I'm like, okay, I know the year is it's a long year, and I have the time, and but also grinding and hustling. But for me, I have the how does it names? Only the thing that I'm a profitable trader, you know. It doesn't make any thing for me.
Ladies and gentlemen, what can I say? I'm really grateful for you that you watched through all of this video, and I hope that it was really useful for you. One thing that I can assure you is that I'm not here to sell you anything specifically, and I'm just here to share free value. So if you actually got value from this video and you understood what is needed in order to have a profitable strategy, then make sure to subscribe. And also, I have an important spoiler for you. In the next video, we will share even more
free sauce in this channel, so stay ready. My friends, if you're not statistically testing your strategy, you're doing something wrong. With this tool named MTJ software, you're not only gonna backtest your strategy, but you're also gonna get all the analytics automatically. It's time to develop a proven strategy that statistically works. You can test MTJ for free, because here in the description below, you will find a link to actually get access for free. I'll see you soon.